500 has gone 55 trading days without setting a new record high, the longest streak since it first hit a new high in 2013. More notably, it has only corrected 4% during that time, the smallest pullback for such a streak in its history. That has minor negative implications for future returns. According to the ISE exchange, over the past 5 days, option traders have bought 62 calls for every 100 puts. That's the lowest ratio in history, dating to 2003. And it has been a decent contrary indicator, which would be a good sign for stocks. Main reason for such a low ratio seems to be the heavy trading in Apple options, which has skewed the ratio during the past several days. Regardless of the reason, it is a minor point in bulls' favor. One-day reversals are poor predictors, still no edge as the stocks gyrate. After the 81 times the SPY has lost 1.5% intraday only to reverse and close in positive territory, it followed through to the upside the next day 39% of the time. When above the 200-day moving average, its success rate was 33%. As noted many times before, one-day reversals are inconsistent predictors, no matter how pretty they might look on the chart. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:18 a.m. Central Time, and I'm recording this in preparation for the market day of August the 13th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's take a look at those charts. And indeed, we mentioned the big reversals, and you come into obviously the big range that we've been talking about. We talked about before the market opened yesterday how we had this coiling pattern, and a break outside that range would likely see us visit the swing lows. And we came close, especially given the context of how it happened. But then, as the European markets closed, the U.S. markets kind of took on, and riding on the backs of Apple, saw a huge reversal. Now the trick is, though, this basically comes down as a false breakout, and we're right back into the range, and ultimately we really don't know anything about where this market is likely to go from here. We're still in effect in the coil. We're still in effect in the middle of the trading range, which is about a 100-point range top to bottom in the S&P, and we are still, wondering where follow-through would be. And as the data just indicated, big reversal days. While we are all taught about the candlesticks, and this is a big reversal day, and that's bullish and all that kind of stuff, the actual data would seem to say that the follow through, at least for the next day, is actually quite poor, and only 33% of the time was the next day a positive day when above the 200-day moving average. So a lot of things kind of playing back and forth here, and ultimately we just are faced with increasing volatility, and we'll talk more about that in just a moment, but at the same time range side action that is in historic terms. Let's take a quick look at Apple. Big reversal day here. Obviously breakout below the support area, but then total reversal, pretty significant size green candle here, and coming up into the prior body, not halfway perhaps, but pretty significant reversal there being posed by Apple. So that, with its volume and with its option volume, certainly plays on the broader market. When you look at the other indices, and let's take a look at NASDAQ first, big reversal there, and obviously that's Apple and others. Apple also, of course, is a big part of the Dow. Big giant reversal there, but that pattern looks quite bearish. And then finally, let's see, the Russell, same thing there. So these big reversal days, but we're left to wonder where this goes. Really all we've got is increasing volatility in the markets, and yet at the same time not anything terribly scary. And we'll go ahead and bounce to the market condition report, and we'll get a little bit out of our usual order. But you know, we've had 3 out of the last 5 days and 4 out of the last 6 days on the NASDAQ, you know, with more than one standard deviation move. And when it was all said and done yesterday, we did not put in a standard deviation move yesterday. Now intraday, obviously we did. This was a big down move, only to end up with big you know, reversal, but close to close it was less than a standard deviation move. So kind of an oddity there to kind of note. IV percentiles, 10, 37, 33, 47, nothing of note there. Skew, notice this is up near our first cautionary level, 125, and we get more excited when we see 135, so that is a little bit of a flag in the ointment. And the short-term VIX, 14.27, so certainly we could call that mid-range. It's higher than it's been, but certainly nothing to get terribly excited about. In terms of a regular morning report and overnight action, the 4 broad market indices all up about 1/3%, nothing really standing out across any of those 4 broad market indices. Crude oil up also about the same, about 1/3%. Euro down about 0.5%. Bonds down about 0.5%, as is gold down about 0.5%. In overseas action, Asia certainly was hopping, with China up 1.76%, Hong Kong about 0.5% up, Japan up about 1%. Germany up closing towards almost 2% at the time of this cut, and that should certainly help with our markets if that holds. United Kingdom up about 0.8%. Today's Thursday, so we have the usual macroeconomic reports for Thursday with unemployment claims, also retail sales, nat gas. Bond traders do note that while this is a yellow report, if you are a bond trader, it could be certainly significant. 30-year bond auction occurs today. In terms of tomorrow, core PPI, capacity utilization, industrial production, and the University of Michigan consumer sentiment. And remember, that's the one that always comes out in the middle of the trading day, and can sometimes be a little bit of a mover. In terms of our regular daily report, still looking at phase 2, trend breaking. Really, we could call this a very neutral pattern, and until we really get some decision outside, not terribly meaningful. IBD status remains uptrend under pressure. This is going on almost 3 weeks that we've been in uptrend under pressure, with very poor accumulation distribution patterns, with the S&P at a D+, as is the NASDAQ. GMI index does stand at a 6 out of 6 with a buy signal, though. Decision point continues, no change here, continues to be mostly red, and our intermediate term market posture is now very bearish. So despite the reversal yesterday, it wasn't enough to help market posture, and market posture dropped all the way into the very bearish category. And indeed, S&P very bearish, Dow really could call this severely bearish, below a 20, NASDAQ very bearish, and then the Russell, we could call that one, as well as the Dow, severely bearish. So the market posture right now is really poor. Level 1 for our hedge warning status, which is our yellow light, or tapping the brakes. And indeed, we do have a number of warnings coming in addition to IBD status and GMI status and stuff like that. Obviously, these two play a big part of this hedge warning opinion, but I also take a look at, you know, the presence of these other indicators, And when you get a series of indicators that are built in different ways and say different things, and they're all kind of ultimately saying the same thing, that hedge risk levels are up, that certainly influences where I come out with my overall opinion. But from a volatility standpoint, we have both market and decline and sharp increase warning has flagged. Our distribution day count for the S&P is at an 8. We do have a daily squeeze on the VIX. So a number of things coming in. Also of note, intermarket risk aversion indicators, all 5 now are flagging as risk off. Also, New York Stock Exchange, new highs, new lows. Over 300 on the new lows put in yesterday with a count of 449. So those are all risky considerations. In special opinions, option income strategies opinion, VIX is inside the acceptable window, but you got to no change here. Keep in mind the potential for increased volatility. Covered call strategies, probably not good conditions for novice traders, but if you are an aggressive trader, a one-to-one distribution between in the money and out of the money strikes, or a reduction in position size would certainly be appropriate. Put selling, very much the same situation. While conditions are somewhat acceptable for new positions with reduced position size, novice traders probably should wait until a bottoming pattern forms. And while we've certainly had a big reversal day and a hammer, we know that the follow through on the one day on that is not terribly good, and we probably really want to see what happens ultimately with a confirmed breakout outside of that coiling pattern at the very least before initiating an awful lot of new positions of any kind. So in terms of sector specific, again, we continue to discount this as moving averages are so flat, and the method in determining these market postures is a similar method, and ultimately we just look for consistency, and utilities consistently have been the stronger, and industrials and materials consistently have been quite weak. We will note that the energy sector has been improving. This one was deep down for a very long time, and we're starting to see some consistency in the shorter time frames to being in the neutral zone. So there does seem to be something happening there. In terms of percent change, you notice energy, a very good day yesterday, up 1.86%. Utilities also had a great day, 1.58%. On the flip side, though, financials, and if we're truly going to be bullish, financials should be not down 0.81%. So when you start looking at things like financials, things like utilities, then of course things like the Russell and the Nasdaq, we really need to see leadership out of the right areas, and not so much buying into safe haven status to mark a good strong bull market, and that is not the patterns that we are seeing at this point. So that should be enough for today. As always, if you find what you're getting here helpful to your trading, we greatly appreciate you sharing with your trader community. Retweet us to your Twitter followers or your StockTwit followers. Like us with Scootify or YouTube, your YouTube channel. Hit that like button. Of course, feedback is always valuable. You can send that directly into the email at support@falconglobaltraders.com. More information is available about our other activities and how we actually apply all these concepts in our daily trading is at this website. Disclaimers as always, hit the pause button if you need more time to review this. And we'll see you back here tomorrow morning before the market opens with the market preview.